Hey, everybody. Good to see you out there, Mr. Hammer, and everybody else. I'm back. Well, I actually did two videos today. I'll share the other one later, who was on with David Lynn. But today, it's Octa Tuesday, so a double bill for those who are interested. Thank you all for being here, those who are here. And it's an interesting story today. The question is there an asset that goes up 89% of the time? And are people clicking onto it? So we'll dig into that. As you guys know, I've been risk on most of the time. It's just the nature of the beast. But the question is, are we in a risk on phase right now in the market? Tomorrow's going to be a critical day, a potential beginning of a Fed pivot that everybody knows is coming. And we'll see what they're going to do. And we're going to look at a whole bunch of different asset classes as well, and some crypto news and everything else. So edutainment, you guys know the drill. And first of all, we'll start with the good news. Lots of interesting good news. Let's talk about gainers year to date and asset classes year to date, because that is the topic of risk on-ness. So here, these are the top performers year to date. And the reason I share this is just to really emphasize how important it is to be in disruption in technology, because it far outperforms everything else. Top companies year to date. Number 1, NVIDIA. Number 2, Meta. Number 3, Warner Brothers. I think they do entertainment or something. Movies, TV, not quite sure. And number 4 is Align Technology. Do they do teeth? I'm not sure, but it's a tech play anyway. Number 5, AMD, a semiconductor, kind of like NVIDIA, all jumping on the whole AI revolution that's happening right now. And number 6, Tesla. They are the top gainers year to date, which is super interesting. But the key fact is, of these top 6 gainers, 83% of them are technology companies. Let's switch gears. Let's talk about asset classes year to date. What has done the best? Obviously, we know it's done the worst. BKX, that's the banking index, and it's down 21%, which is not that bad, actually, considering how many have lost everything. S&P 500 year to date, up 3%. Gold, up 9%. Again, in that flight to safety, people running to the yellow rocks. Nasdaq, up 15%. Technology is beating gold. And then Bitcoin up 68%, 70%, depending on the minute at which you catch it. And that is staggering. So there you have it, ladies and gentlemen. Things are moving in the right direction. So another interesting statistic and number I came across, and this is Bitcoin. It's up only 89% of the time. Now, some numbers here behind this. Bitcoin has been profitable. If you were going to jump into Bitcoin any day of the last 4,593 days that it is traded, that's 12.6 years approximately, you would have been profitable 89% of the time, or 4,065 of those trading days. That means you would have only lost money jumping into the market for 531 of those days, or 11%. And for long-term holders, a lot of people kind of talk about the importance of hodling and everything else, but it's also impossible to do things like DCA and DCA on steroids. By the way, if anybody wants me to do a DCA on steroids video, there was another interesting chart I came across yesterday from Sanjay. And the question is, can we beat traditional DCA? Even if you were just to buy at the top and layer in $100 a week for the last 15, 16 months or whatever. Anyway, let me know if you want me to do that. I will do that tomorrow if that is of interest. But here, that is just stunning. That is like throwing a dart. Investing in Bitcoin is a good thing, especially in times of crisis. Let's look at the market over the last 7 days. You can see here, this is everything divided by Bitcoin, and the dark green is kind of astounding. XRP moved over 20% today on some news, which I don't follow because I don't really follow XRP for obvious reasons I've mentioned before, but it is moving. And the reason that is significant is because maybe alts are beginning to move. And you got some medium color green for Sol, Binance, Ethereum, etc., and some light colors, and a few things did underperform Bitcoin in the last week. Let's look at dollar returns. Again, another great week for Bitcoin. Bitcoin up nearly 17%, ETH up 6%. Again, ETH really lagging behind. But that's been an interesting case. We'll talk more about ETH in a minute too. And of course, the dark green of XRP over the last 7 days. Let's move ahead. Let's go back to one of the key things, that is Bitcoin dominance and where we are. A lot of people are very excited about Bitcoin dominance, but you know, as I've been saying for years, it ranges between a roof and a floor. And right now, at that just shy of 48% dominance mark, it just began to turn around. It might not be easy to see on the chart, but you'll see that tail just beginning to head down. And that's because certain other altcoins like XRP, etc., are beginning to move up, and that is impacting the Bitcoin dominance. So it's not to say that Bitcoin will not continue upwards, but maybe it's getting close to running out of steam, and maybe money is beginning to pivot into some of the altcoins as we go forward. Let's look at Bitcoin season. Yes, it's still sort of on. It's scoring 27 out of 25. Below 25 it is. Full on Bitcoin season. We're just above that, and I do expect it to turn up because that's typically what happens. The money flows to things that haven't quite moved yet. Now, this is a new category on Okta. I'm going to call it BBC for the best Bitcoin chart of the week. Not the British TV station, but this will be shocking to many when they see it first. It's a bit of a head scratcher, but this is a Bitcoin chart starting in 2012. Going to today, 2023. But it is reverse. So you can see, you look at the price on the right axis, it goes from 0 all the way to where we are today. And it's nice sometimes to have different perspective of where we are. And it was Calio who put this chart together. And it gives you another perspective of how you can look at a chart and become very bullish. I added 2 little lines to show kind of the loose channel of where it is between the halvings and where we are now with the upward momentum, which we just broke through that bear winter. And now things are looking very nukeable as we move forward. Again, I thought this was cool. Let me know if you're interested in the BBC Best Bitcoin Chart of the Week. I think it could be a fun one, and we will dig for them. Again, each one is very elucidative. This one, when I first saw it, I was like, interesting. So let's talk about another chart. This is the Bitcoin price after halvings. Now, I also made some changes here. Big thank you to Sanjay for sharing with me. You can see the different colors of the halvings over time and how they performed. And I'm not even sure if I can read them. I think 2012 is the purpley color. 2016 is that teal. The average is the yellow. And where we are today, I added a line to represent the yellow of where we could go over the next couple of months. And it seems very interesting, at least up to the next halving. And it's funny because this chart points to a level between about 45,000 and 46,000. My target is about 42 to 43,000 since December last year, or where we will be by April 14th, 2024. April 14th is the Bitcoin halving date that we estimated over the weekend. So, special day. We'll see if we get there, and that's only 13 months away. And a lot can happen in that time frame, but the action we've had with the banking crisis has shaken everybody up. And a lot of people I know are all of a sudden, for the first time in their lives, talking about Bitcoin, which is interesting. Let's look at the alts and how they're stacking up against Bitcoin. Bitcoin's in the middle, that little black one. You got the separation on the left, you got the old L ones on the right. But the cool thing about this week is everything, with the exception of Leo, is positive. Even Doge, Monero, ApeCoin, Chainlink, Uniswap, Tron, they've all become positive in the last 7 days. And Bitcoin is down from where it was. It was much higher up the rank, but you can see some other coins are doing really well. Stacks has been huge this last 90 days. Aptos, Phantom, Lido, even Solana's up there after making their recovery from that ugly situation of being associated with you-know-who way back. So let's talk about options. Options numbers, again, deeply bullish. This is the Skew for May expiration, May 26, 2023 for Bitcoin on Deribit. And you can see the put call ratio is 0.22. Basically, there's nearly 4 calls purchased for every one, or for every 5 calls, for every 4 calls that are purchased, there's only 1 put bought, which is a very, very low ratio. And that signals a very bullish expectation for the next 2 months. 2 months and 5 days precisely. So interesting to keep an eye on. Let's look at how people are stacking. This is a key stat here. These are holders of 10 Bitcoin or less. And you can see the blue wave is severely up and to the right, and the adoption has not ceased. In fact, over the last week, it's even accelerated. The week to 10 days, a lot of people are scrambling to buy Bitcoin. We'll talk more about the actual sales of Bitcoin and how that is actually skewing stuff on some centralized exchanges because people have limited on-ramps. But this is the amount of Bitcoin, as I mentioned, that hold less than 10 Bitcoin. And it's, again, another all-time high, pretty clear from the chart. But the key thing is, if you break that down into its component parts, I like to look at the cohorts. Those that hold between 1 to 10 Bitcoin hold 2.1 million of the supply, and those that hold 0.1 Bitcoin to 1 Bitcoin hold about, I think it's 1.02 million. And then beneath 0.1 Bitcoin, I think it's about 300,000. So if you add that 1.02 million plus 2.1 million plus 300,000, you have approximately 3.5 million of the Bitcoin that in their existence are held by these smaller groups. And remember, these are also relatively recent adopters over time. So the big people back in the day would buy lots and lots of Bitcoin because it was $10 or $100 or $1,000. Now it's getting harder and harder to accumulate because the price is going up and up. But anyway, this is an interesting stat to keep an eye on. And this will continue to grow, hopefully, for everybody. And it'll show how we can distribute the Bitcoin that exists more widely amongst people in the world. In some decoupling news, how Bitcoin is compared to the Nasdaq over the last 90 days. Nasdaq has done very well, but this goes back to December 20th, I think. And you can see Bitcoin is up 23%. The Nasdaq is pretty much flat over the last 90 days, but it did have a good roll so far this year. Let's talk about GBTC. I know many of you hold it. Grayscale Bitcoin Trust is shrinking again, which is good. The discount is down about 36.83%. It did shoot to 35 and then fell back down again to about 42, 43. Now it's going back up. So again, everybody is looking at the SEC hearing when Grayscale have gone to sue the SEC. The latest I heard is the judge is confused why Gary Gensler allowed a futures ETF, but not a spot. So either they're going to cancel the futures ETF, which I think is unlikely because you can't put toothpaste back in the tube, or they will approve the Grayscale Bitcoin Trust as an ETF, and then discount will go to 0. So hold tight, everybody. We'll see what happens. And if we do see 42 or 45%, it might be worth a little nibble because the odds of Grayscale winning the suit with the friendly judge they have is about 65, 66% last time I checked. Now, let's talk about miner revenues. Some of the miners were on fire today. CleanSpark made a huge move. Next week, I'm interviewing the CEO of CleanSpark, and that'll be an interesting one. And we'll have all the hard questions. But here you can see miners are, of course, a key beneficiary of the actual price action. And they saw their revenue spike up to $22.6 million a day. And this has helped miners not only plug their machines back in, but took many of them off the brink because it was hard to not make money for quite a lot of time, especially for those miners that have a lot of debt. And here we saw not only are they making a lot more money, but they broke convincingly above the yearly average. So we're breaking a lot of averages now. And again, another very bullish sign for the space and the miners and the security of the network. Let's talk about some Blackhole news. As I say, normally there's one big thing or a couple of big things that suck everything in. Well, Render Network is going through a governance proposal to migrate from Polygon to Solana. And 55% of the users favor making the switch to Solana. And only 14% of the users actually want to remain on Polygon. And remember, right now we are seeing a big move of the best Web3 builders moving to the best stack. They will be joining Helium and others that are planning to move to the Solana blockchain. So interesting times. Yes, I'm familiar with the problems that they've had with the recent upgrade and the outage and everything else, but they are really, really focusing on robustifying everything as quickly as possible. Let's hope Firedancer gets up and then they have an automatic failover. But either way, it's not changing, big chains from deciding to move to that blockchain to run their businesses. And that is a very positive sign. Speaking of movements, the Coti CEO, Shahaf Bar Geffen, says Djed will migrate to the ETH blockchain because he believes it needs to be on that platform and also help support decentralized finance. And again, there's moves happening. I don't know exactly if they're going to stay on Cardano as well, but it'll definitely drive a lot more adoption, probably being on a bigger chain. So that is interesting too. Let's talk about ETH a little bit more. Ethereum's price is right now, last time I checked, $1,800, and Ethereum fees fell below $2 per transaction. And that is as low as I can remember it, super low. And that's also despite the high price. Ethereum went as high as $1,840 not too long ago. And here we are again. So despite this 7-month high, the network has appeared to heat up and create notable transaction barriers due to high demand. And this is a good sign that ETH has the door open to $2,000 and beyond. Despite all the fear of Shanghai dumping a bunch of tokens, things are looking very good for Ethereum right now. The chart's looking very tasty too. So let's talk about a little quiz that Sentiment put up there on the Twitterverse. Which comes first, $30,000 Bitcoin or a 2K ETH? And they're both relatively close, but I think a lot of the audience and a lot of the sentiment seems more bullish towards Bitcoin right now, because 56.6% of people believe Bitcoin will hit it first, despite the fact you could argue Ethereum is closer to their $2,000 target, especially when it hit 1840 very recently. And there's very little sentiment. A lot of people say below 26K, Ethereum below 1600, a small amount. So again, the sentiment's bullish, but the sentiment's not always right. And this is proof. There's a lot of people that trade following sentiment. That's a mistake, in my opinion. Keep that quiet. But even with crypto having a great week, the amount of discussion on crypto seems to be down, but the prices are going up. So the question is, does negative sentiment keywords bring down the price? No. I personally believe markets do not follow sentiment. Sentiment is driven by the few, and markets are driven much more by fundamentals. So that's my take. So it looks like this chart from sentiment actually backs that up. So let's look at some money flows as well. Still drainage, but a lot better than what it was last week. But it is the 6th consecutive week of drainage. But there is some good news. And if you break into the detailed flows by asset, you can see Ethereum is down heavy. Bitcoin down heavy too over the last week. But Litecoin, Solana, Matic, XRP are all up. And that is positive. And this could be the harbinger of telling us that maybe altcoin season is coming in. Maybe this is coinciding with the Bitcoin dominance tipping down a little bit. So we'll see. Either way, the rising tide will shift all boats, and good things are happening with Bitcoin. And as Bitcoin goes up, the rest of the market will follow. In addition, all eyes are on CZ's wallet. I watch this almost hourly. People ping me, what's the wallet doing? What's the wallet doing? Well, $191 million left the wallet over the last week since I showed this last. The chart on the left is what it was exactly last Tuesday, exactly 7 days ago that we made this video at the exact same time, 2 p.m. Pacific. And right now, there's less dollars in that BUSD wallet. Where it has gone, though, I do not know. There's very active trading happening on that wallet, and I don't quite know exactly what it's been buried in. I do know some is in ETH. How much? I don't know. I'll try digging into that later and find out for you all. But that is interesting. But we'll see. I wonder, is he nibbling? Is he DCAing? Is he going to go big bang? But he's clever enough not to do that, because a big movement of $1 billion would cause the price to go north. And that it makes it very difficult to accumulate a big bag at a good price. So for those billionaires out there, don't buy all at once. Let's look at the top 55 crypto VC firms as of March 2023. A lot of people were of the belief that they all got wiped out and died with all the crap that happened in 2022. But no, they are alive and well. Biggest one out there is A16Z Crypto, Andreessen Horowitz. And second is Binance Labs, based in Hong Kong. Watch that space, Hong Kong. They're going to be very crypto friendly in June or July of this year. And that's going to also open the floodgates and help propel the bull market further. Animoca Brands are also based in Hong Kong down the list. And then Texas, Multicoin Capital, 112 crypto investments, nearly $3 billion. They are also active. Pantera is there. A lot of these names did get hit hard, especially Polychain Capital, but a lot of them are doing very, very well. And that's good to see that they will survive and come through the winter. But also regarding Texas, they have just submitted some very crypto-friendly law to protect people with Bitcoin and other things. So for those of you out there in Texas, I know some of you, I can see you from Austin, that's good. And it's nice to see how friendly and advanced Austin is towards things like Bitcoin mining and protecting Bitcoin citizens and being anti-central bank digital currency. All good. Keep your borders closed because everybody's going to want to live there. Let's look at the stock market of the last 7 days. A lot of green, except for the bottom left corner. That's the financial sector. Regional banks as well. Did a little bit of a bounce, but it's been hard. But the green week, again, if you look up here, Google has been on fire. And Google is a very special company. I believe it is one of the top AI plays. A lot of people think Microsoft is going to eat its lunch. I don't think so. And I've been looking at Google for nearly 20 years. Meta up big as well for the week. Tesla up 8% at a very, very strong day today after a Moody's upgrade to investment grade asset. Amazon as well. And the question is this another point where the markets are going risk on, especially when you see the performance year to date and the activity over the last week, and especially as the financial sector has crumbled. And people are not investing in the traditional risk-off type assets so far in 2023. Again, everything moves in cycles. I covered it last year that if people go risk-off in a certain year, they typically go risk-on the next year, and especially as the market sniffs that Fed pivot, which we'll talk about. Let's talk about Tesla for 1 second. Great news out of China. Tesla insured 18,712 cars in China last week. It's a weekly record. And things are just chugging along. And that may not sound like a lot, but nearly 20,000 cars in a week in China is good. And guess who is not enjoying this news? And that is BYD. In Shanghai, BYD has reduced shifts at 2 of their huge assembly plants in China. As somebody familiar with the matter told Reuters. And this shows you how they are facing very weak demand out there. Despite high demand for EVs, BYD is not able to compete with the likes of China. And we'll see if this will continue or if this is just a flash in the pan. I'm not sure, but there's other car companies around the world that are reducing capacity and trying to force people to quit, resign. That's a new way of riffing people out there. And another news as well, North American or US inventories for the Model 3 and Model Y are still very, very low. There's less than a couple of hundred cars available at any given time. But if you look at this line of this chart, you will see as Tesla is ramping up production and making much more cars available faster, but they're all selling very quickly too. So it's a very, very positive sign for Tesla and for Q1 numbers. And we'll be getting a release of those in about 9 days. So let's talk about getting back to AI, ChatGPT, Google, Microsoft, etc. Just for some perspective, I pulled the numbers on search traffic. And I looked at the numbers in January 2022. I looked at them in January to February 2023, month on month. It has not changed a beat. Bing is still doing about 2.9% of search, and Google does the other 93%. So with all the hubbub about, oh, Microsoft got ChatGPT, well, no. Google has it too. It's now embedded in Google Sheets, Google Docs. You can actually run your own ChatGPT inside your own platform. If anybody wants to see how that is done, it is quite magnificent. And it's also quite terrifying how everywhere AI is and how good ChatGPT is. Okay, I was going to try to get a better word, but I don't remember what I was going to say. Now, in the final piece of news, before we get to some of the bad and ugly news, Coinbase Premium Index. You can see the green spike on the right-hand side of this chart from Crypto Quant. It is through the roof, ladies and gentlemen. The Coinbase Premium Index. By the way, Coinbase, I think, went up 50% in the last 2 weeks as well, the stock. But the CPI, Coinbase Premium Index, is a metric that we will start tracking here. And it tracks the premium or discount of the price of Bitcoin on Coinbase. Remember, and when it is high, it means there is huge demand for spot Bitcoin. So much so they can charge way more than they should be charging for it. So is this part of the Balaji FOMO that's been created? Everybody's rushing to buy Bitcoin, and that rush and that demand has not subsided yet. So it's time for some bad news, everybody. First of all, well, it's not really that bad news. It's actually kind of good news, and let me explain why. But the odds of a 25 basis point hike tomorrow is 86%. That's bad. That's stupid. They're hiking. They're issuing trillions of dollars in quantitative easing and hiking at the same time. If they do that, it will show that the Fed is consistently stupid, consistently late to everything. And, why change at this stage of the game? But the good news is, after this last hike, it'll be stop and then it'll be cut. And that's going to happen. And the market knows it. And that's why the market's going risk on, because they're looking forward to that time. After all of the, I call the lid on the market and exuberance and all the terror that they've spread, now they're turning. Way too late, of course. Everything's already smashed. But, and we're going to see things still getting smashed for the next 6 months. Remember that. More shoes to drop, but here we are. Let's look at this one, BTFP. I think the acronym is so funny. I always try and find funny patterns, but the BTFP program, I think, I can't remember what it means. Whatever, the backstop funding program that they have to make sure banks can cover demand and guarantee deposits made by individuals. That's where we are now. It's funny because the BTFP up there in the top right, you can hardly see it as a little blue purpley line, but I believe BTFP means BTF dip. If you guys know that other acronym, why would they pick BTFP when it sounds so much like BTFD? But the point of this is the Fed spent a year trying to reduce their balance sheet. And in one day, all of the work they did in reduction was they borrowed half of it again, just like that, which I think is stunning. So we're back in QE mode, and they're only just beginning. And now a little bit of ugly news, I'm afraid. First of all, token unlocks. You guys like this new session? We track them all across the top 500 cryptos. And here, these are the list of all the ones that are happening over the next couple of days and weeks. And the top 4 this week as well are kind of skinny. Watch out for Sweatcoin and Step In and Optimism. Another view of this is to prove that tracking unlock works. If you look at the last week, the top 50 by market cap, those that tanked really bad, on average 6% each, Lido, Apecoin, and Filecoin. This is during a time when the market is going up. This is because of unlocks that we spoke about last week. And here are the big unlocks over the next 7 days. Arbitrum, that big airdrop is coming in 1 day and 16 hours. Then you got 1inch, Akala, LuxRare, Stargate, Immutable X, Yield Games, Euler, Stepin, etc. We are trying to work on a model that estimates a post-unlock, depending on the size of the unlock, how much the token is guaranteed to fall. So for those who like to short out there, it could be a fun little model. In addition, the really sad news as well, last year was a historically very tough year for everybody. If you look at the amount lost in 2008 So $8.3 trillion was lost. The amount lost by households in the US in 2022 was 4.1. So it's half. And if you take into account actual nominal value, today's present value of that money, that 8.3 would be a lot higher. Be like 16 or 14 to 16 trillion. But again, last year was rough, but we can make it back. And we did start with a bit of a bounce. This is the bubble chart for the bank failures so far this year. Now, what this gives you great perspective on is the size based on history. All the bank failures around the world between 2001 and 2023, you can see that Credit Suisse was bigger than Washington Mutual Bank, which was the biggest bank failure in the history of the world. But also there's two other red bubbles there, Silicon Valley Bank and Signature Bank, also extremely large. So it's not like we've had a huge number of bank failures so far this year, but those that have failed have been huge. And many experts say there's 186 to go. So with that, everybody, thank you so much for being here. Smash the like on the way out. Thank you for all the donations and everybody in their chat and the moderators and everybody else. And I'll see you all tomorrow. And also follow me on Twitter too, because I tweet a lot of fun stuff. I use Twitter for fun, but when it comes to notifications of videos that are coming out, especially me and other channels and vice versa, it's a good place to catch that as well. So thank you, everybody. Have a great night. 2,500 people out there, and I'll see you all tomorrow.